Hello, everyone. Welcome, guys. We'll get started shortly. Welcome, everyone. Welcome, everyone. We'll get started shortly. Welcome, everyone. Welcome. We'll get started shortly. Welcome, everyone. We'll get started shortly. Hey, Kawisi, welcome.
Good evening, David.
Hello, welcome. We'll get started shortly. This evening is trading in the zone, trend following, and trading systems. Hey, Charity, welcome. Guys, we'll get started shortly here. We'll get started shortly, guys. So trading in the zone, trend following, and trading systems. We'll get started shortly. We'll get started shortly, guys. We'll go over the markets also. We'll get started shortly. Hey, Bill, welcome, Bill, welcome.
Hey, David.
Hello. We'll get started shortly, guys. Trading in the zone mindset, trend following, and utilizing our trading systems.
Utilizing our trading systems.
Hey, Charity, welcome.
Yeah.
Welcome, Tracy, welcome.
Hi, David.
Hello. We'll get started shortly. All right. Okay, let's go and get started. All right, I'm going to share my screen here, my trading screen. All right. Let's see here. Okay, so you guys should see my screen. Monster scalper here, but we'll start with the market. So the equity markets, guys, as we go through this, right? So as we go through the different markets, we'll focus on mindset, all right? Trend following, so following the trends, staying within the different phases, and then using the trading systems to maximize our trading opportunities. Okay, so if you guys have any questions, just interrupt me. All right, or if you have an input, all right, on any of this, just interrupt me. Okay, so we're still in the markdown phase. All right, so we're still in the markdown phase on the equity markets. All right, so we shouldn't be trading long. All right, this is on a weekly time frame. All right, so solid, right? The Dow, S&P, and NASDAQ is still solid in the markdown phase. All right, so here's a short signal on the Dow. All right, looks very much the same on the S&P. All right, on the S&P, NASDAQ, and Russell. Hey, Anthony, welcome. All right, so that's the Dow. Here's the S&P. So same price action. All right, so the trend is down, right, in the markdown phase. All right, so it's the markdown phase. This is a weekly chart, guys. So this is the weekly time frame. So there's real selling in the market. All right, so again, when we focus on trend following, we want to make sure we stay with the trend. All right, so clearly in the markdown phase, the equity markets are still in. All right, so be very careful. You shouldn't be trading stocks long. All right, you shouldn't be going long. If you go long, you've got to do it really, really quick, kind of like what we do with Sniper, right? We in and out, in and out. All right, so don't go long, and if you do, be quick and nimble. All right, so here's the NASDAQ. Look at that, guys, right? Straight down. All right, so one update in the markets doesn't change the trend. All right, doesn't change the trend. All right. All right. The VIX has come down a bit. The VIX is at 28. All right, so it's come down a bit, but it's still above 20. All right, so that continues to be very bearish for the markets. All right, so here is the VIX right here. All right, so it's come down a bit. Hey, Travis, welcome.
Hey,
All right.
David.
Hello. And it's at 28. Okay, it's at 28. But the important thing to note is that we are in the markdown phase. So the trend for equities is down, right? Lower. So be careful, be careful. All right. As far as the sectors, all right, and we'll get more. Hey, Stella, welcome. We'll get more into this on Thursday with our equities class. Hey, Gerald, welcome. All right, we'll go over the sectors, all right, in our equity class. We'll start to look for shorts, all right? So we'll start to look for shorts in the equity markets, and we'll do that through our monster short system. We'll start to look for short opportunities. So on Thursday, we'll look for stocks that are breaking down, okay, to either trade short or do options. We just have to be careful. It's tricky, but we'll go through that and we'll look for opportunities in stocks to go short. All right, but again, right, we're going to focus on the trend, follow the trend. All right, and we want to have the right mindset, and then we want to follow the system. So we want to follow our signals. All right, we don't want to trade against the system. All right. All right. Cryptos right here, we still have a target for Bitcoin. All right, for Bitcoin, and you guys know that the majority of the crypto market will follow Bitcoin. Bitcoin works out as a good barometer for the entire crypto market. So we are holding, we had talked about the 20,000 mark, that we would get some support. All right, some support at 20,000, not very strong support. All right, but that we might get some support there. Bitcoin really does like the whole numbers, right? Like 10,000, 20,000, 30,000. You guys remember it stayed at 30,000 for quite a long time. Yeah, right in here. So it's holding right here at that 20,000 mark. All right, but the target is still 10,000. All right, so that target is still 10,000 unless we see buyers come in. All right, so 10,000 is still the next target, the next big support. And then after that, all right, after that is 4,000. All right, which is right about here. All right, so next goal, next target 10, after that 4,000. All right, based on how the price does in this area in here. All right. I want to talk about Forex. All right. I want to talk about Forex and the yen pairs. All right. I was up early. I was up real early. Watching Forex. A lot of the pairs pull back. All right. A lot of the pairs pull back, but they held. All right. They held. So that was good. But this is an example, and I'll go through this. All right. And I want you guys to really ask any questions about this. Okay. Because last night was a bit challenging. All right. The pairs pull back quite a bit. Okay. Quite a bit. And that will happen. That will happen. All right. So we're going to go through this. And I want you guys to ask any questions, okay, on how we manage this, the pullbacks. Okay. Who is still in the yen pairs? Anyone is still in the yen pairs?
I am, David. Can you hear me well?
Yes, I can hear you, Gerald.
Hey, one of the things that you mentioned on the video that was really key that I wanted you to see if you can talk about was that managing your margins, because with the pullbacks, you said you can get kicked out because your margins are not managed well. As a new trader, what are some of the things that we need to keep in mind when we come down to managing your margins?
Okay, so good, good. So we'll go over that, your margin, okay, and managing that, okay, very good. Anyone else? Anyone else about last night's trades, the yen trades? Because we're going to spend some time on that.
Yeah, I have a question.
Okay.
So I learned a really hard lesson last night that I don't know how to take profits when they're there. And so I was in a lot of positions that had done very well. And then when the CAD JPY signal came on,
okay.
I got into it very, very heavy, and it did really well for a while. And then I was at work and I wasn't watching. And so when they retraced, it was just it was just a bloodbath for me. And so I was like, I need better discipline in maybe taking profits or maybe late entries that I shouldn't be in.
Okay.
So yeah.
Okay, so let's talk about that. And normally I am not up And what if you guys have noticed, what we're going to do with Monster Scalper, all right, is we've got, this is similar to what we're doing with Sniper, right? Where we have alerts for Sniper. Now, you're not going to get specific buy and sell, all right? So, but we're gonna push you in the right direction and get you guys focused. Okay, so everyone who is in who has Monster Scalper, you guys will get, and you've probably noticed that you're gonna get dedicated messages from me. Okay, and that could be at any time. So it could be 2 o'clock in the morning, 2 a.m., 5 a.m. Just be ready. All right, we're expecting for Forex to really move. All right, so we're going to put a lot of focus on Monster Scalper. All right, keep in mind that when the equity markets, the way it's worked in the past is that when the equity markets become bearish, when they get into a correction, right, Forex really moves. All right, these pairs in Forex really move. So we've got to pay a lot of attention to the Forex market, Monster Scalper in particular. All right, so that's why we've added more pairs. We've added 13 more pairs. All right, and we're gonna dedicate more time. All right, so you guys will hear from me a lot more when it comes to Forex and Monster Scalper. All right, but what we want to do is we want to catch those rotations, right? We want to catch those rotations, and what we want to do, and we'll talk about this, right? We want to talk about how we manage the trades, okay, and how we manage capital. As we move forward, we'll get more into that, okay? So a lot of time, guys, when these pairs move, right, let's find a good example here. Let's see here. Let's see here. Okay. So Stella, let's talk about yours first, CAD yen. All right, so here is CAD yen. And this wasn't just with CAD yen, this was with a lot of the pairs. Was it CAD yen, Stella? Was it CAD yen?
Yes, it was. Yeah.
Okay.
Yeah.
And how many
Yeah.
pairs were you in?
Maybe like 6 or 7.
Okay, 6 pairs. Okay. Okay, and Gerald, how many pairs were you in? And we'll talk about margin. Go ahead.
5 pairs.
5 pairs. Okay. Okay, so let's talk about this. All right. So what happened last night was this, and this will happen, right? This will happen sometimes, right? Where we get in. Let's do this here. Let's see here. All right. So right here, look at this buy signal right here, right? Buy signal, price went straight up, right? Never really pulled back, right? Had a little bit of pullback right here. All right, a little bit of pullback, but went straight up. All right, that's great, but it doesn't happen every single time. All right, so this is what happened with a lot of the pairs, and this was a pretty big pullback, right? Here was your buy signal right here, Stella. Now it was a high buy signal. I think Gerald, you'd contacted me. You wanted to find out when that buy signal for CAD was going to come in, because I think CAD yen was one of the last ones to give a buy signal. All right. Ideally, it should have came in right about here. All right, but sometimes that happens. Okay, it gave a high buy signal. So, and Stella, you got in right at the buy signal right here, right?
Yes.
Right.
Yeah.
Okay. And then it went up, and then you went a bit heavy. Now, did you go heavier? You had six positions. So you went heavier here than the other positions?
Yes.
Okay.
Yes.
Okay. Okay. So we'll talk about that. Okay. So guess what happened? It pulled back, right? It pulled back. It went pull back. These are 4-hour candles. So it pulled back all the way down here, almost near that previous resistance, which is now support. Hey, Gerald, welcome. Okay. So the good news is that it held, and this is why I was up watching it. I wanted to make sure that these pairs held. All right, they held and they didn't break down and do something like this. All right, but understand that this right here, this pullback right here, all right, is pretty tough, right? It's hard to take these pullbacks, especially if we're trading several pairs, right? And especially if we go heavy, all right? So look here. Now, if they just go up, right, kind of like this, it's all good. But when they pull back, it gets dangerous. All right, it gets dangerous. Now, if you guys look here, so that's one. This one here, stayed Swiss, pull back a bit, right here, pull back a bit, but held. Aussie yen, pull back a bit. This one right here, red candle. So you guys should be out of this one here. That's a pretty big pullback, right? That's a pretty big pullback. Now, how do we manage this? How do we manage this, right? Two things. We want to trade less, all right? So understand that every time the way the margin works is this, right? When the trade goes in your favor, right, you're going to, that your margin increases. Okay, so the money that the broker gives you increases because you're making money. All right. When the trade goes into a negative, right, your margin is going to decrease, right? So you're using up that margin. I always tell traders, you want to keep about at least 60 to 70%, minimum 50% margin available. Okay, at a minimum 50% margin, and you want to watch your margin. All right, you want to watch your margin. Every time we add positions, so if we have 6 positions or 5 positions, right, you guys should see on your platform, what percent of margin that you have available. Okay, so just start to monitor that. When we trade, and I know we don't talk about this a lot, and we'll start to talk about it more, how we manage our trades, okay? And what we want to do, and we do this with the coach, with the one-on-one coaching, okay, is you guys want to take a set amount of trades. So let's say Stellar, all right, you did six positions, right? 6 pairs. Gerald, you did 5. If you're going to do that, do a small amount. If you're going to take, that's okay to take all those trades, right? But if you're going to do that, do a small amount, okay? And that amount, those total trades, I would say shouldn't be more than but 20%, 10, 20% of your capital, okay? So 5 trades, let's say you take 5 trades, all those 5 trades shouldn't be more than about 20, 30% of your capital.
Is that a 20% combined or 20% each trade?
Combined.
Okay, gotcha.
Yeah, combined. Once you guys get really good, right, then you can bump that up. All right, you can absolutely bump that up, but 20% is a good rule. All right. Now, So let's talk about this. All right. We don't need to trade every single pair. All right. So this is what we want to look at it, right? We do not, when I trade, I'll trade 2 pairs, usually max. All right. And the way we want to do it is this. All right. And for me, I like pound yen. I like pound yen, euro yen. If you notice, they will all move together, right? So all these pairs here, right? They're all up, right? They're all up, right? They're all up. We know that they've been moving higher. We got buy signals on them, right? Some pairs will run better than other pairs, right? Like here, like Swiss yen is the best trending pair, right? So you can take that 20%. Let's say you can take that 20% of your capital. You can spread it around. You can spread it around 5 pairs. All right. But guess what? That's more work. So now we have to monitor 5 different pairs, right? That's a lot more work, right? When we trade, all we want is that move, because now we can take that same 20% and we can put that on one trade. All right. So we can take that 20% and we could, hey, if Swiss yen if that's the #1 trend in pair, hey, we can just ride that trade. Right? We can take that capital, put it in one. Or you could do 2. You could do euro, yen. All right. We don't have to do all of them. No, we're going to track all of them. All of them are going to get buy signals. And what we want is confirmation. We have all the pairs here. Not that we want to trade every single one, right? But that we know that they're all going in the same direction. All right. Now, and I used to do this years ago, I would trade a lot of the pairs. If you want to trade more pairs, do a fixed amount. Okay. So Stella, if let's say you have several of your favorite pairs in the yen group here. So let's say you like New Zealand yen, right? Let's say you like euro yen and you like Swiss yen. And those are the pairs, they're breaking out and you like those pairs, you want to trade it. All right, do a fixed amount. Okay, so let's say for instance, you do 1,000 units. In one, do 1,000 units. In the other, 1,000 units in the other, as an example. So do a fixed amount. So you remember how you went in heavy, right? Right, Stella, you went in heavy, right? All the others were the other 5 fixed?
No, it was, I hear you. I just took way more than 20% and it wasn't fixed.
Okay. Now, okay. So now the other pair, and guys, this is a learning lesson for everyone. Now, because I know we don't talk about this a lot, but we'll start to talk about it because we're going to be really pushing monster scalper. And Forex is volatile, right? It really moves. And the worst thing we want is to get out of the trades, right? Right? They're going to pull back like this one did here, right? Pull back and then went right back up. All right. So what we want, because we want to be robotic as possible, systematic as possible. All right. And what we don't want, we kind of want to remove the greed and the fear. All right. So if we put on, what tends to happen is this, right? When we see moves happening, and I know we all get excited, right? You know, things are breaking out, right? And they'll break out pretty fast, right? You know, they'll break out pretty fast. And what we have to do is not go heavy on any particular trade. So we have to treat every trade the same. Okay, so use a fixed amount. Okay, and I tell traders, hey, if you're starting off, do 1,000 units. and then work that out. So if you took 3 trades or 4 trades, 10,000 units for Forex. So one mini lot, and you do that and you build that. All right. And then the next time, as you build your muscle, right, your trading muscle, then you add to that. You might do, 2,000. All right. But every single trade should be the same. Right. So don't go heavy, because we don't know which one, right? We don't know which one is going to take off, right? Sometimes it's the one we go really heavy on doesn't really do anything. And the one we go light on, right, that's the one that take off. But then that messes with us, our mindset.
Yeah, I noticed that.
Yeah. So it will, it will really, but not only that, it really skews your results. So we can take, let's say we took 5 trades, right? And we're following the process. The trade that we go really heavy on, right? If we have a loss on that trade, we go really heavy on, guess what? It's gonna skew our profitability, because guess what? If we have a losing trade with that particular pair, even if our other trades are winning, right? And we had a profitable, and they were profitable because you experienced that, Stella, right? Because we went heavy on that particular trade, guess what? It brings down our profitability on the other trades.
Yeah, and for me, I mean, I could have stayed in the trades. It's just that my margin got totally, so it was multiple things.
Yeah. And I suspect that was gonna happen because of the pullback, and we just don't know how far these pairs are gonna pull back. And keep in mind, a lot of traders don't like trading on the 240 and the wider time frames, because they have to give it room to move. If we're trading on a 5-minute time frame, on a 2-minute time frame, right, on even a 15-minute time frame, we can get out a lot quicker. All right. So we don't have to give the trade a lot of room to move, right? But on a forward time frame, we have to give it room, so it might move 100 pips or so, sometimes even 150 pips, right? So just like in here, we've got to give it room to move, right? In here, right? We have to give it room to move, right? I know we don't talk about this a lot, okay? But it's important to have enough margin, right? Have enough margin to give it. You can add more capital, but I rather you guys just reduce your size, right? Reduce your size. Now,
I have a question about adding that capital, David. If you add that capital, let's say you come in at a mini lot, the first trade, and you see that the trade is going well, may have hit some resistance, and then it broke resistance again after it consolidated a little bit. And if you wanted to scale up, is it advisable to scale up at a larger lot size, or just keep it at the same?
No, always the same. Yeah, always the same size. Okay. Yeah. I know we talk about this when we do the coaching, but yeah, always a fixed amount. Okay, always a fixed amount, right? And then once we get used to that, and we trade that amount well, then we go to a larger fixed amount, and then we stay there for a period of time. Because understand that the amount of capital that we use, guys, to trade, right? If it's okay, so everyone is different, but when we trade, I assume that everyone is the same. So it doesn't really matter the capital, the level experience, a level of experience is I guess what, and your success rate is what will determine, right, the amount that you guys trade. Okay, but keep in mind that it really doesn't matter. It really doesn't matter your experience. It has to be a fixed amount, because what happens is this, right? If we put a larger amount of capital, if we start to say, hey, well, I'm going to put less amount of capital on Swiss yen, all right? But now with Euro yen, I'm going to put more capital, right? Now, what does that say about the trade? What does that say about the trade or our trading? What does that say? And remember, this class is trading in the zone, trend following, and using the trading systems, right? So let's think about trading in the zone, right? If we say, okay, on Swiss yen, we're going to put a certain amount of capital, and on Euro yen, we're going to put a different amount of capital. What does that say about our trade?
Inconsistent, I would imagine.
Yeah, inconsistent. Okay, what else? What else? Think about those of you who've done, those of you who've gone through the one-on-one coaching, and you have you've used trading in the zone, right? What does that say?
You're not really following your system.
Yes, we're not really following our system, but what else? What am I looking for? Think about it. What am I thinking? What am I looking for?
We're letting emotion drive our decision.
Yeah, all of that, all of that. But we know, pay attention now, we know what the outcome is going to be. Because if the reason we're putting a larger amount, right, on that particular pair than a different pair is because we know, right? We just know that this one, right, is going to be the one that makes us a lot of money, right? So there's some greed factor there, right? So why wouldn't we put a larger amount on the other pair? Why that particular pair? All right. And then why do we have to trade 6 pairs or 7 pairs or 8 pairs when one pair will do? I want you guys to think about that. Because if they're all the same, think about it like this, right? If we don't know, right? And we don't know, right? Because it's a game of probability, right? We don't know. It's a game of probability. We don't know which one. Right? So when we do that, we're saying that we know, right? We know, or we think we know, that this particular one is going to perform much better. Whether we know that consciously or subconsciously, right? That's what's happening. So we want to take all of that away, right? And we want to just treat it as a game. They're all the same, right? They're all the same. They're all the same. They're all the same.
It's American greed, David.
What's that, Anthony?
It's American greed,
It's
man.
American greed. Yeah. But we all do it. I mean, we all do it. And especially, we will do it especially when things are really moving, right? So when things are really, really moving, and it's just what it is. It's just human nature, right? Human nature. But we want to flip it, right? We want to treat every single one as the same. Every single one is the same.
David, I have a question.
Mm-hmm.
and I haven't been doing this too long, but I have noticed that when you enter the trade, like different, if I take 1,000 or 10,000 of each pair, the cost and the PEEP return is different. So
Yeah.
to me, I would say they are not the same. So for example, I don't know whether it's the TRY. There's one which every time I try to
Yes.
take it, I'm just like, I so expensive. So when you say they're all the same, are they really, like, what would be the rationale?
I don't even
Of
trade TRY. I stay away from TRY. I don't know why.
yeah, like why?
And it's like
Yeah.
Travis doesn't like to trade the yen pairs, you know. And yeah, so no, they
David, I
will.
actually got in on 2 yen pairs, and it's further confirmed my suspicions of why I don't like to trade the yen.
That's funny.
Oh my goodness. Yeah, they're difficult to trade, right? Because guess what? Because they're volatile, right? They do move,
But the
right?
problem, David, about 3 or 4 weeks ago, we had such great results in those yen pairs, and it's kind of clouding our vision to what really is going on.
Okay, so let's talk about that. All right, let's talk about that. All right. So we're talking about this previous run right here, right? This previous
Exactly. Yeah,
run
we had
right
such
here.
a great result from that, and we're like, hey, this is about to happen again.
Yeah, and it very well might, right? And it very, oh, I'm glad we're having this discussion, right? It very well might.
Right, and I can see why Stella would go heavy, because I'm thinking I can go a micro lot or a half a standard lot. I mean, absolutely.
Yeah. And what we'll play these games, right, with ourselves. We're like, hey, it happened before, it can certainly happen again. Right?
So David, I had one other experience with the yen pairs, and it was similar to this, where it had a huge run. There was a rotation, a very quick rotation, and then the yen pairs went off again, and I got in, and it just went sideways within like 2 or 3 days. So I am now testing the theory that after a large run, there's going to be like a hiccup, and then like a like a phantom, like a smaller run that's going to correct itself quickly. But that's the theory. So this is the second time it's happened, second time in a row for me.
Yeah. So there are a number of things, right, that's happening, right? And I think and this is why we want to talk about this, trading in the zone, right? The thing we want to be careful with, and not just the yen pairs, but trading in general, is our expectation, right? Our expectation. All right. So, and I want you guys to think about this. All right. So when we trade, and I know we get excited, these rotations do really well. You should get excited. All right. But it's a different kind of excitement. All right. It's not these highs, extreme highs, and these extreme lows. It's like an internal thing, right? Okay, let's get ready. Right. So when we talk about, hey, things are consolidating, get ready, this rotation, it's to get in a state of mind, right? Build your capital. And now build your capital doesn't mean, right, scaling up, right? Build your capital means that, hey, you're going to take some capital and put it in your account and help to build your account. All right. All right. So Gerald, to your question there, right, about your building your account, right? Now, when you guys, when we get these breaks, right, when Forex gets into a consolidation, you guys are starting to see that, right, where we go from one rotation to the next, one rotation to the next. That is to get yourself ready. And we want to be in a state, we want to be in a state where we're just calm, right? Right. So when we get into these markets and we start to trade, right, we want to focus on being calm, not chasing. Think of it like when we trade 5 pairs, 6 pairs, 7 pairs, right? Guess what we are doing? Right? We are expecting an outcome, but we're also chasing the market. Right? We putting everything on. It's like we betting, right? We betting the whole, we betting everything on this run. And that really messes up our trade. So we can take, this is a great trade. If you guys look here, and Gerald, you'd mentioned, yeah, we had really good previous run, this run right here. And then here, it's like, what's going on? But guess what? Nothing is going on. All right. So look at this. Look at this. Yeah, there are some exceptions. There are a few pairs that are not, that were really, really challenging. Okay, but check this out. Check this out. All right, dollar yen. Here was the buy signal here. All right, it went all the way up here. A lot of these pairs, and you guys got in. A lot of you guys got in late and still did really well on the 240. Some of you traded it on the 30-minute time frame. All right, so bought here, got out here. Is this a really good trade? Anyone? Is this a really, will you guys say this is a really good trade right here?
That's an excellent trade.
That's an excellent trade, right? Now look at this trade here, right? Look at this trade here. This is reaccumulation, right? Here is resistance. The buy signal is right here. All green candles, right? It's in the markup phase. Is this a really good trade here, or is this a bad trade?
It appears to be a good trade. We don't have any indication that it's a bad trade, so we'll have to wait and see at this point.
Exactly, right? But look what's happening. It's setting up perfectly. There's no guarantee. We don't know, right? We don't know, but guess what? It could do this, right? Look here. Let's take another one right here. And I'm just randomly picking.
Yeah,
right?
don't show us try those.
What's that?
Don't show TRY. We don't want to see TRY.
TRY, JPY? This one here?
I just don't have any. I just think TRY is just such a bad, no matter what currency it pairs with, it just never does well.
Okay, so let's talk about this. All right, look here. And Stellar, you'd been working on this, right? You'd been working on this, staying in the trade. Who else was working? Bill, you've been working on this, staying in the trade, right? Staying in the trade, staying in the
Yeah, I'm
trade.
still in.
You're still in, okay. So just understand this is part of the work we have to do. All right, but look here. Look here. It's the noise. It's all of the noise within the trade. And that's why I'm trying to get you guys to kind of learn, and you'll get it by doing it. All right. And messing up, you're going to mess up. All right. So here was this buy signal right here. The price went up, came all the way down here. Right. That's painful right here. That's the noise right here. It went up, came down here. That's the noise right here. Went up, right? Went up here, came back down. That's the noise right here. And this is what's happening. It went up right here. This right here, very painful right here. Even if we bought in here and it went all the way up here, just this pullback is going to mess with us. right? Just this pullback right here is going to mess with us because your account is going to go from here to here. This is a beautiful trade. SGD JPY buy signal right here. Look, it pulled back right here. This right here is scary. All right, but guess what? All green candles, great trade, right? Kept on moving higher, right? It went all the way up here. Look at that. And then this was overnight. It pulled right back right here, held support, right? All green candles. This right here caused all that panic. This right here caused all that panic. But guess what? It's still in the trade, a great trade. All right. Buyers are still in control, all green candles. Look at this, moving up right above that, moving out, held support right here. And guess what? It's looking to now go and perhaps test resistance. It happened here. It happened here. It happened here. All right. And it happened here. So, yeah, that previous trade, right? Previous trade of the yen pairs were great trades, right? But guess what? These are great trades too. We just focused on this right here. Now, a couple of things that can help, right? Do fixed amounts, reduce the size to the ridiculous. All right. If it's $20, right? If it's $20, if our threshold is this, the maximum we can lose that we want to lose on the trade is $20, then that's the amount. If it's $80, right, and that's not your amount, right, guess what? It's going to be stressful, very stressful, right? If it's $800, boy, think about the pressure, right?
I'm going to the emergency room.
What's that, Gerald?
Going to the emergency room.
Yeah. Yeah, right. Right. So, and it's a must. I want you guys to think of it like this, right? And once you guys get this, there were times I've had to take traders and I take them all the way back to the ridiculous. And I have them build back up. And all the best traders will do that from time to time. If they get off track, they have to go back and start building again. All right, so this is the way it works. This is the way it works. Your trading is just like the resistance, all right? The resistance on your chart here. So this is you guys here. So here is resistance here. And then let's say, okay, this is $50. That's your resistance right here. Just like the price has a resistance, you guys have a resistance. And you say, okay, $50, there's a lot you can do with it. I know with inflation, but it's $50, right? It's $50. And if we trade that $50 and it's gone, understand it's gone forever. There's no getting it back, right? And then if we do that 5 times, we have 5 trades and we lose $50 on each trade. That adds up pretty quickly. So then guess what? All right, if this is difficult, all right, imagine what 500 will do. All right, and I just want you guys to start thinking here. All right, if 500 is difficult, imagine what 5,000, how it feels to trade 5,000 or lose 5,000 on a trade. And you guys can't even think about losing 5,000 right now on a trade, because guess what? This is your resistance right here. This is your resistance. And you guys have a barrier right here based on your skill level and your knowledge and your trading experience. The goal, right? So we have to match your experience with your level, with your resistance. All right, so that that fear goes away, right? So trading.
Would it be okay to set up stop losses until we're ready for that?
Doesn't matter. Stop loss will not cure this.
Okay.
Okay. So, and I tell every trade, it doesn't matter the amount of capital. It doesn't matter. It all has to do with experience, trading experience, knowledge, and everything. We can take someone who has a lot of capital and doesn't know how to trade, and they're gonna blow it. But we can take someone, all right, and this is what you guys want to do. You want to take a $200 account, all right, do this, and take that $200 account to 2,000. All right, and now take that $2,000 account to perhaps 20,000. And we do that, right? We do that by building, right? By building. So this is what we do. So here is your resistance. Everyone starts here. Here is your resistance. When we trade, we have to trade with an amount. We call it our milk money. We have to trade with an amount, okay, that we are absolutely okay with losing. Let me repeat that. When we put on that trade, right, we have to put on a trade an amount that we are absolutely okay with it being totally gone. Whether that amount is $10, right? Whether that amount is $20, whether that amount is $200, it's gonna make us think differently when we take that trade. If you guys knew that, hey, if I put on that trade, that there is a certainty, because there's no guarantee, right? We know that, right? There's no guarantee. There is a very good chance that when we put on this trade, that we could lose all our capital. Guess what? We think about it differently, right? We don't put a large amount on one trade, and we don't trade a lot. We are very selective. We become very selective. So we look at all of these pairs, right? We look at those buy signals, and this is what I want you guys to start doing. Really look at the buy signals. Really see, okay, like you say in Gerald, that USD, that TRY, JPY, I don't really like that. That's what we want to do. Travis is like, well, you know, I don't really like the yen pairs because it's your capital, okay? It's your capital, and you guys have to be very selective, because guess what? When it's gone, it's gone. It's gone. Now, can you take a different trade and make money? Absolutely. But that trade right there, that trade, right? That capital for that trade is gone. Okay, so we want to be defensive first, right? I always tell traders, you know, in sports, you know, who win games, defense or offense? And it's usually defense, right? So we want to be defensive first. All right, stop loss, No, it's not gonna do it, right? Oh, how we manage capital, how we manage the trades, how we manage the capital, the systems like here is gonna get us out, right? We know, okay, break support, we're gonna get out, protect us here, right? We're gonna catch the runs right here, right? You guys, your job is to manage everything else. And the way we do that is by managing your emotions, but also doing money management, managing your capital. So if $10, and I know it sounds ridiculous, but $10 is going to feel to someone, all right, very differently, all right, $20 to someone else, and $200, and then $2,000. You have to get to the point, whatever that number is, all right, you have to get to the point where it is okay. It is okay. It is, you're absolutely okay if it's gone. So forget about making money, right? How much we gonna make? Because everyone, you know, we all want to make a lot of money, right? But how much are we willing to risk? Okay, because when we put that trade on, there is no guarantee that is going to work out, right? And that's the mindset we want to have going in. And it's not a fearful mindset, it's just a realistic mindset. And what that does, it keeps our emotions in check. All right, it keeps our emotions in check. $20, losing $20 a trade, right, is a lot different with your emotions than 200, then 2,000, then 20,000. All right, that makes sense.
I wanted to say something about the stop loss.
Oh my
Forget
goodness.
everything else.
Stella,
Stop loss.
Stella, I went through all of this, Stella. All right, all right. Okay, Stella. All right. What about the stop?
I mean, I struggle with it and I use it, but
Oh my goodness.
I remember the Zoom meeting. There's a Zoom meeting when I started where you brought Ricky,
Mm-hmm.
and we were asking him questions, and somebody asked a question about the stop loss, and he said something which I have experienced. I don't know whether it was true or not, but he said that he feels like the house or whoever the broker is or whatever, like they hunt for stop losses.
Yes.
And so, you know, you put in your stop loss and it's just like that little, you know, wick will come, just take your stop loss, close you out, and then the price just goes back to where it was. And I remember one time I was watching, it was really late at night, and I was watching the candles, and out of nowhere, like this wick that was the longest, it was like 3 days long wick. It just shot up in 1 minute and it was gone.
Yeah.
I was like blinking. I was like, what just happened? It was like literally like 3 days and I can't even explain why that happened, but I can't imagine how many people got stopped out of that trade. And I can't tell for what reason. I don't know that it really had to do with the market. Anyway.
Well,
you know, David, I'm hearing that like 90%, 85 to 90% of the market, it's bots, it's algorithms. That's what it is.
yeah, a large percentage. But you know, even with that, so let's look here. Okay, so let's take this trade as an example. And that's why you know, we don't have stop losses. Okay.
Exactly.
Yeah, because they will run stops. And it's not that anyone is I used to think that, hey, someone is watching my trade. You know, you kind of feel like that, right? You know, and they're pushing the price towards your stop loss just to get you out. All right. And that's not really the case. All right. Well, that's not really the case. What's happening is they're trying to get a better feel. All right. So they're trying to get a better price. All right. You know, is there some manipulation? Absolutely. I mean, there's some manipulation out there, right? It's money, right? It's, you know, so but I don't want you guys to think of it like there's someone out there. I used to think that there's someone out there watching my trade and they're just trying to get me out of the trade. Okay. Understand, like here, all right, always anticipate a pullback, right? So every time we get into a trade, whether we get that pullback or not, always anticipate a pullback, always get your mind ready for that pullback, have your capital ready for that pullback, all right? Sometimes it's even better to like Brian will do this, right? Brian will wait for the pullback. All right. He'll wait for that pullback to happen. See right here, we bought right here. Here's the buy signal right here, this blue arrow. Here is actually where our entry was. And look at it, that it pulled back right below that, within our box here. It pulled in right below our box. That is back in accumulation, right? So it pulled back right in accumulation. A lot of traders will put their stop loss right in here. They'll put their stop loss right in here and they'll get stopped out. Now they're not getting stopped out because someone is watching their stops. They're getting stopped out because guess what? The buyers are not ready, right? The buyers are not ready to push the price up, and the sellers are, there's more sellers. It went back into this consolidation. So if you put your stop loss anywhere in here, guess what? You're gonna get stopped out. The buyers are just not ready. It was just like here, right? The buyers, hey, we have indecision. The buyers are not ready, sellers are not ready. All right. So even when with the breakout, guess what? There's no guarantee that this breakout here will happen like this breakout. So when we go heavy, all right, or we expect that, hey, the price is just going to go up our way, we're asking a lot, right? So what we want to do is take the trade, but manage, all right? So 90% of the work that we do with trading, so assume that we have everything else, right? Assume that we've got the right tools, right? The right tools meaning we have a process that's going to cut our losses quickly, get in on a break of resistance, get out of on a break of support. All right, so have small losses, cut our losing trades quickly, and then have a process to stay in our winning trades as long as possible. That's how we make money. Small losses, big win. So assuming,
David,
go ahead, Gerald.
I think one of the things that I really appreciate about the class tonight is, even though those yen pairs are all trending up, they're all blue, there's only 6 of them, maybe close to 5, that are actually in the yellow when it comes down to the range and then trending section. They're all red. The other ones are red, so they're not even tradable. And I appreciate that because it seems like we're supposed to be in all of them, but in reality, they're not even yellow. They're a couple, 5 of them are red. When you look at the trading, some of them 18, 17.
Okay,
one of them is 14.
Gerald, what are you saying? I can barely make out what you're saying. What are you saying now? I'm sorry.
Hold on a second. No, I was saying when you was talking about not being in every pair at the same time, that's actually pretty good, because when you look at the ranging and trending section, only 6 of them are actually yellow. The other ones are actually trending red.
Bingo,
And they're
bingo.
not, even though it shows blue on the actual left side of the screen is up, they're not tradable because they're 18, 17, 15.
Bingo.
And so I didn't know that until now, that you're like, you don't have to trade them all because they're not tradable.
Yeah, you don't have to. Okay. Okay. All right. Okay. So what we're looking for, all right, I want you guys to really think about this. All right. And I know we're going all over the place. We talk about several things here. All right. And I'll always bring up the analogy of a lion, right? A lion, right? And you've got all these gazelles or buffaloes or whatever. The lion doesn't go after everyone, right? Does the lion go after all the gazelles?
No,
Yes or
not
no?
at all.
No. Which one?
The weakest link.
Weakest one.
Yeah.
The one
Only
you can
one.
get.
Yeah, only one. So I want you guys to start thinking about a little differently about this. And Jared, you're absolutely right. Right here is pound yen. Guess what? It's consolidating at, it's a yen pair, but guess what? It's at 18. Here is Aussie yen down all the way down here. It's a yen pair. It's part of that group. Now it gave a buy signal. It's at 14. But look up here. Look at Swiss yen up here. All we want.
And that's why I was getting killed.
Yeah, all we want, guys, the reason why we want to know, right, whether these are all moving up and whether we have buy signals is that we know that that group as a whole is moving and it's moving long, right? Our goal is to find the best one out of all of this, the best one or two, and then we put that capital to work, right? Now, here, look at this. Look how different this looks. Swiss yen, right? Swiss yen compared to, let's find a yen pair down here. We won't pick on TRY, JPY. It's all the way at the bottom, right? So
you got Euro, you got ZAR.
ZAR, where is ZAR? US.
ZAR 17. ZAR 17.
Where is it? I don't see ZAR.
Right there. You just passed it right there. Go back up.
Yeah, right here. 17. Look at that. Look at that. Look at that. Very, very different. Right? Look at that. Right? Look at CAD yen. Right? Very, very different. And that's just breaking out. So that, I'm glad you mentioned that, Gerald. Okay, so when we know there, we've got buy signals, they are breaking out. They're absolutely breaking out. All right, find the best one. Find the best one, but that's still not a guarantee. So we don't go heavy, right? We don't go heavy. We still manage based on our capital, right? We trade according to our capital and our experience. And the goal is to, yes, initially we want to be okay. And I want you guys to really think about that. Is $10, am I okay with losing $10? Am I okay with losing? I mean, it's gone, right? If I'm okay with losing $50, all right, am I really, really okay with losing $100? All right, and what that will do is you start to really do the work, right? You really do the work, right? Because you think, oh man, am I really okay with losing $50? And if I take 5 positions and I lose $50 in all 5 positions, that's what, $250. If I take 10 positions, I lose $50 in each. That's 5. Am I okay with losing that amount of money in one day? then we think about it differently, right? Now our focus is not on making money, right? It's focused on now protecting our capital. Protecting our capital. And now, guess what? We're not trading the yen pairs down in here. We're looking just for like that lion, right? That lion has to eat. Has to. Just has to. So can't just chase everything. Has limited energy, right? Has limited time. So we have to do the same thing, right? We know that, hey, all these yen pairs, they have buy signals, they're breaking out, they're getting into that markup phase. We can't trade every single one of them. We only have a limited amount of capital. All right, let's find the best one. But then even with that, there's no guarantee. All right, no guarantee. So let's put the right amount of capital to work. All right, so good class. Good class. And I'm gonna tell you guys, it's painful, but this is where you learn. So Stellar, right? That experience last night, and I that's why I made that video and I sent that out, because I had a feeling, right? I had a feeling. All right, but these are the lessons that are gonna sharpen you guys. And you guys are really thinking, right? Like Gerald, you're really starting to think about these pairs here, and you're watching here. Yeah, why would I trade, you know, pound yen? Even if I like pound yen, it's consolidating, right? Or ZAR down in here, right? Or Aussie yen when there's euro yen up here. And guess what? The number one pair, and we always talked about this, right? If you guys are ever in the top trending pairs up in here, you're doing well. Okay, you're doing well. So I'm glad this happened. I'm glad this happened, because now you guys can kind of really see what's going on. All right, and really focus on money management. All right. If you're not willing to lose that capital, right, then don't trade that capital. If you're not willing to lose it, because that's what it is, no one knows, don't trade that capital. And that makes us work even harder, right, to really take profits. When you guys get to the point, and this should be your goal, this should be your goal, put $200 in your account. See if you can take that $200, all right, and make $300. Take that $300 and see if you can make $600. Take that $600, see if you can now grow your account to $1,000. All right. It's a really good exercise to do. If you blow that $200, go back, start again, do it again. The worst thing we can do is to take $2,000, $3,000, $4,000 and try to trade that. Not at this level.
Hey, before you go, David, I like to end it like saying every year the NFL crowns a champion for the Super Bowl. The team that lost always have to regroup and start all over again. So this is a painful lesson, but we got to regroup and start it all over again so that we can continue to fight.
Yeah.
And so I appreciate it.
Yeah. And understand, you guys are learning these lessons early, and you're learning it early, soon in your career, right? Think about the person, right, who doesn't have this information, right, and is out there and they're just trading, they're trading large amount of capital and they don't know what they're doing, right? And they're not building those muscles. What you guys are doing right now, you're building those muscles, and you're gonna go from one resistance to the next, just like we do when we trade, right? Travis is a much better trader now than when he came in, right? Stella is a much better trader from when she started. Charity is making amazing improvements, all right? And Bill, right? And you, Gerald, you guys, from where you guys, just think about the growth, right? Just think about the growth from where you guys started. Just think about that. And then this tonight is just another growth. It's going to take you to the next level, right? So here is your resistance. You guys were here. Here is your resistance. And now here, you're breaking another resistance in your growth, right? You're breaking another resistance. All right, you're breaking another resistance. All right, until, and it doesn't end, it never ends. In this, it never ends, because guess what? Here is that $10, here is that $20, here is that $30, here is that $40. Every step here takes a little bit more work, because everything here, there's some pain. All right, there's some pain, and I hate calling it pain, but there's some things, some lessons that we have to get from here to learn to get from here to here. All right, there's some lessons, some things we have to build, some muscle we have to build to get from here to here, and then here to here. All right, but we all have to do it individually. We all have to do it individually. Everyone, you mentioned Ricky. Ricky did it really, really quick, but Ricky doesn't tell us about, he'll talk about his pain and he went through some stuff. He's never going to tell us what he really had to go through. All right, to really make that jump. All right, what I would like for you guys to do is do it slowly. There's no rush. We have a lifetime to do this. There's no rush. And once you get it, you guys are getting it. You're getting it. You're getting it. There's no rush, right? There's no rush. So we don't have to trade 5, 6 pairs at once. We don't have to put a lot of money trying to do things quickly, right? These rotations happen, right? You guys saw them before. Here was a rotation here. Here is a new one right here. Look at this. Price is moving higher, right? Hopefully it breaks this resistance right here. We'll get another one. No hurry, right? No hurry. Focus on money management, right? Build those skills slowly. No rush. All right, no rush. Great class. Great. When we do these classes on Wednesdays, trend following, trading in the zone, trading systems, yeah, this is the kind of stuff we want to talk about. All right, it's not easy, right? But it is simple. All right, guys, any other questions for me? And what I'm going to do with, now that we have I'm sending out information only to monster scalper traders, similar to what we do with sniper, right? I'm going to help you guys walk through this. So just like we did last night, right? Just like we did last night, right? I'm going to send videos like that to help you guys kind of manage yourselves through these trades. All right. Did you guys like that? Did you like that?
Oh, I certainly appreciate it. Even the video this morning. Did you send out a text at 3 o'clock this morning?
Yeah, we sent out the text and then the video.
Yeah, it was very good. We appreciate it.
Yeah, yeah. So we'll keep doing that. All right. So kind of help you guys stay in these trades, because that's the goal. We want to stay in these trades, and we don't want to be scared out of these trades. All right. All right. Stella, you're not in CAD yen anymore, are you? Stella? Is anyone still in CAD yen?
No, I bailed on it already.
You bailed? Okay.
Yeah.
Yeah.
I had enough of that.
Yeah. But I
It's
want
free
you,
falling.
yeah, and I want you to look at it now.
Yeah, I know.
What I want you to do now is just watch it. Use it. So you're out, right?
Yep.
You're out. Now watch what it does. Watch
Yeah,
what
I
it does.
definitely look at it as a learning experience.
Yeah, yeah. All right. All right, guys. Great class. Great class. I will see you guys tomorrow. Okay. Have a good evening. Take care. Bye-bye.